Hey guys, Daryl Dyke, CEO and founder of Noble Mortgage and Investments, here with your weekly update. First and foremost, want to say our hearts and thoughts and prayers are to Lebanon after that horrible explosion yesterday. I read somewhere today that was the third worst explosion ever recorded behind the two nuclear bombs dropped in Japan during World War II. So major explosion. Just feel horrible for them. They've had a really rough year in Lebanon with lots of other things, and then this happened. So thoughts and prayers to them. What's going on in the market right now? We did get some interesting data out of HAR. They haven't come out with their full July report yet, but they did come out with some information as far as listings available. New listings are down 0.3%, and active listings are down 28%. So we continue to have a little bit of an inventory problem. I think a lot of people that don't have to move are not going to move right now. They're not going to upgrade or do anything else if they don't have to. Still worried about COVID-19. So we do have a little bit of an inventory problem. Hopefully that will reside. We've also had some lumber issues. A lot of our new construction guys and guys that are rehabbing, doing major rehabs, have reported to us that the cost of lumber has gone up substantially, and that has a lot to do with the factories not able to keep up. So keep an eye on that, and then when the July data comes out in full, which I imagine will be here any day now, I'll report to you guys about that next week. We did put up on our Facebook and our Instagram, anybody wants to ask questions now when I do this weekly update, which is again every Wednesday at 1 o'clock. So we did have a question from someone asking about hard money if be affected by foreclosures flooding the market. So typically if we go through a time when there's a lot of foreclosures like we did in 2008 and 2009, it's sad that people lose their homes, but unfortunately it's just part of being in real estate. So that creates an opportunity for investors, not unlike Harvey. When we had Hurricane Harvey, for the next 6 months, from our standpoint, we were extremely busy because you had a lot of people that just didn't want to repair their homes getting out of it. So that created a flood of houses to the market for investors to jump in and rehab and either sell them or keep as a rental. So I anticipate the same thing. I don't know, the foreclosure moratorium is coming up. My guess would be that would probably be extended. I can't see how, especially during an election year, they're going to allow a bunch of people to be foreclosed on, especially still that we're still in the case, in the situation we are with COVID-19. Not much has changed. Things are opening, but kind of half speed. So I can't see that the mortgage companies will start foreclosing. We'll see a flood of foreclosures this year. If that does happen, I would imagine that would probably be next year. That's just my best guess, but we'll have to wait and see how that happens. So my guess is they'll push it off. So upcoming events, if you've been following us, we're trying to continue doing our networking events, although remotely because of what's going on. We used to have our happy hours and our basics and breakfast. So we're continuing that with Zoom calls. We started our Rev Network, which is a real estate virtual networking event. This has been a lot of fun and huge success. Every week we get more and more people, and it's a great opportunity for investors who are new or have been in the business for a while to come in, and we give you all about a minute or two to tell everybody your name. You can put your contact information in the chat box, offer a service, offer a property for sale. Maybe you're looking for property. So we've been doing that every 2 weeks. Our next one is on August 12th, and we're also going to have Fast Track as our guest that day, and they'll be talking about how not to over rehab your property, which a lot of investors do, especially that are new. They tend to fall in love with the property and over rehab it. The following week, we're having a webinar. If you're a realtor and you need continued education, we have a free webinar that's coming up. That's on August 19th. I will be speaking on one of my favorite topics, which is DISC, which is a behavioral assessment. And if you're not using this and you're in real estate, then you're really behind the curve. This is a way for people to interact and read each other's personalities so you can learn how to better communicate with them. And you can use this for your loved ones, your spouse, your girlfriend, your boyfriend, your kids, your friends, your coworkers. We use it here at Noble Mortgage. It's a big part of our business. I have a big poster in our break room, has a picture of everybody, what they are. So DISC is it's an acronym, and it stands for the different types of behavioral assessments that people have, and people normally have more than one. But I'll be talking about that for about an hour. So that is a 1 hour continuing education credit. As well, we will have Steve Rosenberg. He's going to be talking about the 5 pillars of real estate investing. Also a continuing education credit, absolutely free. So if you haven't registered for that, please do so. You can go to noblemortgage.com and click on events, and you can register for both those events. And then we also have another networking event on August 25th, which is also our networking Rev network that we've been doing. But this one we're switching to the evening. We're going to try to do it as a happy hour. So we'll see how that goes. All the other ones have been during the day, about 11, 12 o'clock. But this one we're going to try in the evening and see if what kind of response we get on that. So if you're available on August 25th, I believe it's going to be around 6:30, 7, something like that. We're going to have Kevin Shelton, who's an investor, talk about his story. Again, you're welcome to come on, offer a service, put your information in there and tell everybody what you do or what you're looking for. So that's on August 25th. So again, noblemortgage.com, click on events, and you can register it. Lastly, I've been telling you this every week, and I'm going to continue to say so until the rates change, but rates are crazy low. And today we're talking about how you know it's time to refinance, how to evaluate that. And there's lots of myths about this. A lot of people are not sure when or if it makes sense. So again, rates right now, we saw 15-year primary mortgage rates dip into the ones here in the last week. We saw a 1.875 rate on a 15-year loan. Crazy low, lowest it's ever been since we've been recording this. So if you haven't refinanced, again, that's investment property before people start getting mad because I didn't say it's not investment property. It has to be a primary to get that rate, but less than 3% on an investment property. So still really good rates. If you haven't done that, if you haven't done so, please look at refinancing. Give us a call at 713-680-8100. So how do you know when it's time to refinance? Well, there's lots of factors that go into there. I just refinanced my house, okay, and I'll tell you my scenario. I bought a house about a year ago, and I was paying 3.75 on a 30-year loan. So to me, I just got into the house. I did a 30-year loan. So saving as little as 1% made sense to me. Number one, because I just bought it. Number two, I plan on staying in the home. So one of the first questions I ask people is, how long do you plan on staying in this home? You have to look at the closing costs. All loans have closing costs. So I plan on being in my house for at least another 5 years. I did the math. I was saving however much money I was saving per month, and I figured out it would take me just a little over 2 years to recoup my closing costs. So after 2 years, or a little over 2 years, all that is savings to me. That makes sense. Now, let's say you're in a 30-year loan and you're 10 years into it. So now you have 20 years left. Should you refinance? Again, depends on what your goal is also. Are you trying to just lower your payment? Are you trying to build equity quicker? Are you trying to reduce the number of years that you have a mortgage? So it really depends on those things. A lot of times you can take someone who is in a 20-year or a 30-year loan that has 20 years left. We can refinance them into a 15-year loan, and the payment may not change, or if it does, may not change that much at all. So now you've knocked off 5 years of your mortgage. So that's a possible scenario. But typically, if you're going to be moving anytime in the next 2 or 3 years, it's not going to make sense for you to refinance because you have to give it time to recoup your closing costs. Lastly, a lot of people want to refinance in order to pull cash out. So one of the things you need to know about this is this good or is this bad? So it can be, right? It depends. I always tell everybody, you ever ask a question in real estate, the answer is typically it depends. So number one, you're paying off, let's say, high credit card debt or whatever type of debt that you're using the money for. So that's a good thing because now you have credit card debt that you're paying interest on and you're using a mortgage to pay that off. So now remember, all your mortgage interest is tax deductible. Good thing, right? However, keep in mind, when you pull out cash or any type of cash out loan on a primary residence, your rate is going to be a little bit higher. So if you hear someone quoting, a 30-year fixed mortgage at 3.5%, you take that and turn it into a cash out loan on a primary residence, that rate is going to be typically anywhere between 0.5 and 0.75 points higher. So we have to do the math. So give us a call. We can run you through those scenarios, but it doesn't hurt. It doesn't cost you anything to run through that scenario and figure out exactly if it makes sense for you. But if you are paying over 3% on a primary residence or over 4% on an investment property, then it very well makes sense. It very well may make sense for you to refinance. So we can run those numbers for you and give you an idea. Anyway, that's all I have. Hopefully we'll have all the July data for MLS coming out here the next day or so. I'll report that to you guys next week. Until then, everybody stay safe, wash your hands, and pray for Lebanon.